we have the 50 moving average coming down of a leg to the downside above the golden ratio. The longer this drags on, we are about to get a really important weekly close for Bitcoin while we are sitting at a really important support zone. Today we're going to talk about what I believe is going to happen next here over the next 48 hours for Bitcoin, if we're going to drop, if we start to go back up from here, and how you can make money out of that next move. Let's go. Thank you guys for tuning in again. As you can see, today I have no electricity behind me, but I have a generator finally that is providing me with energy at least to make content. So later tonight I'll get energy back, but it's fine, guys. It's fine. Let's directly jump here into the charts. So here on the Bitcoin CME chart, yesterday on Friday we closed the CME market for Bitcoin at $60,350. Now Bitcoin is trading around the $61,000 mark. If we would remain here until tomorrow evening, that would mean that we would create a CME gap of roughly $600 here on the CME chart, and potentially even higher if Bitcoin decides to break out today or tomorrow and move into $62,000, $63,000. So be prepared for that we might create a quite big CME gap that we need to come back to fill, and only then continue to rally to the upside. But in terms of the spot price, the difference, the spread between spot and CME is also quite big right now. There's a $800 discrepancy, and I'm going to show you that in a moment. Because remember, here $60,400 was the closing price, and now I go to a 50 minutes chart, and yesterday at the same time where CME closed, the Bitcoin price was around $60,700, $60,800-ish, kind of around that mark. So we have a free $400 spread between CME and the spot price, and that would mean that if we would open, for example, today or tomorrow at $61,000, CME would be opening at $60,800, so there's a $400 gap. That was the point that I wanted to make here. On the 50 minutes chart, Bitcoin is trading in this ascending triangle. We got a fake breakout to the upside, and now coming back into the ascending triangle. Usually that's a really bad sign when we see something like this, and it's a precursor of a leg to the downside, so where we basically go against the grain of that pattern. And if we would go against the pattern, because it's a bullish pattern, don't forget, if we break here down and go bearish, then the target would be roughly $59,800. Now, do I believe that we're going to reach that? I have my doubts that we would actually go all the way down here, but I want you just to prepare for that. Would I take here a short to catch this trade? No. Really simple, because there's so much liquidity above us that it just doesn't make sense to try to short here. Your profit to the downside is limited right now, because there's so much also underlying support around the $60,000 area, and only the upside direction is right now the area where you more or less have a way better risk to reward ratio for taking trades. Also in the open interest here on CoinGlass, what we can clearly see is that the open interest is again increasing, leverage overall is increasing, but we also had a small spot bid in this pump here, which was quite nice. But now, of course, I guess that some of these longs getting here a little bit punished. We see here a red candle in terms of open interest, but it's nothing crazy yet. That was not we did not see a flush yet, you know. So if we can maintain this and go here in tandem with the spot market to the upside, then we should be fine and potentially see continuation to the upside. But if we lose here momentum on the spot side and leverage is increasing and we keep going higher here in open interest, then at some point we are going to get a flush, and it will be most likely around the $62,000 area. Now on the 4-hourly chart, also here we have the 50 moving average coming down, and that will be the first big resistance for Bitcoin to jump above that That is the next initial target for the Bitcoin price here. Right now, that would be sitting at $62,124. Of course, that is a moving target. With every 4-hour candle close, this line will move a little bit lower as long as the Bitcoin price is not trying to catch up and touch it and eventually break above it and to flip it into support so that we can continue our upwards trajectory. Here we are also in an ascending triangle. Here's way more room still to bounce around between the upside and the downside. You can of course trade this. Right now I would not take a trade here, potentially at 61,200 where I would open a trade, just to be sure that I'm above that resistance level. And I would only do it if I would have a 50-minute or 30-minute candle close and trade it here to the top of $62,200. Then what you can do is you can short this from here back to the bottom of the triangle with a stop loss slightly above here. And then you can play this bounce game with shorting and longing as long as we are going sideways in that ascending triangle and get a proper break either to the upside or to the downside. So that is just if you have the time to do that. Unfortunately, I don't. You can play here the support and resistance game. In terms of indicators, they are basically showing more sideways movement, a little bit more chop, because the RSI is going sideways, the stochastic is losing steam. Even though darker green candles on the MACD are getting smaller, they're not really increasing anymore. Therefore, we should be prepared for a little bit more sideways action here in the short term. Then on a 12-hourly chart, we are holding above the golden ratio. That is, of course, a bullish indication for continuation to the upside. And also the consolidation that we have here between $62,200 and $60,000 is telling me that we are potentially forming here something like a W shape. And once we're breaking above 62,200, the target would be around the $64,000 level. Here, for that to be playing out, we only need to hold above the golden ratio here, the $60,700 level. And best case scenario, also hold above these 0.5 level, $61,400. And once we are flipping this into support, we should see the continuous move here into higher levels. Lose the golden ratio, and we will most likely then go to the 0.786. Again, guys, I just showed you this level. I just showed you this level in a different context. Just be prepared. If we lose the golden ratio, we will come down here and potentially even retest the underlying bigger support zone. But again, for the time being, I'm not that concerned about that because of all the liquidity sitting above us. Here also, really easy. Once we are breaking the downward sloping trend, you know that Bitcoin is ready to change trend and go back to the upside. You see this here also on the correction chart. So we are now 108 days overall in this consolidation and correction phase. The longer this drags on, the more likely it gets that at some point we're going to see a big candle to the upside. So we are also running here again into that resistance. We're sitting right now at $61,400. If we get a proper break above that by Sunday or Monday and close that on a daily level, then you know, okay, we are most likely at the early stage of the end of that consolidation and correction phase for Bitcoin. On the weekly chart, also really important for tomorrow that we are holding above the 25 moving average here. That was the moving average that was supporting us for the time being, and we were holding above it. If we lose that tomorrow in the week with the weekly close, that would be really bearish, because look, the last time when we lost that, here's when we lost that in August last summer. So we were then until October consolidating below. So we don't want to see something like this right now. What we want to see is just a retest, beautiful retest right now, and then continuation to the upside next week. So, but again, for that we need the weekly close being above the $60,400 level. Watch out for that. Now, why does the thumbnail say don't miss out, buy? Because if we are getting a weekly close above $64,400, I will be buying wherever the Bitcoin price is at that time. I will be buying more. I will also getting way more aggressive in my trading style. I have a new partnership coming up with an exchange that I'm not going to mention here yet, but there I'm gonna open really massive positions in the future. So from next week actually. So you should look out for that. And I will use the funds that I have on that exchange immediately to aggressively long Bitcoin if we get a weekly close above the moving average here. So if we are not getting close here, then most likely next week will be the worst candle to the downside in terms of the consolidation phase that we get. And I also gonna buy there. So I gonna buy in any case, guys, because it has always proven in the past that when we get in a bull run under this moving average, that this is always a huge buying opportunity. Now, in terms of where the liquidity is, so here you see there is not a lot to take out below us. Even on the last 24 hours, and what we ramped up on liquidity on the liquidation heat map, you see there's way more stacked above us than below us. If I move this here to a weekly chart, then you see the same thing. Over the whole week, we have accumulated so much liquidity. Look at this. This is insane, guys. So much liquidity above us. We only need to tap here to $61,800, and we are going to trigger a short squeeze. I think one that we have not seen in a long time, where we get a proper short squeeze over a couple $1,000s to the upside. So, and here to the downside, yeah, worst case scenario would be $60,000 in terms of liquidity, and then there's nothing left, and then we really have to go to the upside. Now, in the Bitcoin dominance is finally bouncing. Remember, guys, I told you yesterday that's something that I was looking out for, that we are getting a bounce here in the Bitcoin dominance, because if we would just continue to go here really aggressively down, of course, our altcoin backs would go up a little bit, but the way that we came down here so fast, we would have also gotten then really big bounces and fast bounces back to the upside in terms of dominance, and that would have been again bad, because then our backs would have bleeded as fast as they got filled. So, and that's not what we want. We want sustainable moves and giving altcoins the opportunity to form support that we can bounce off from when we get another big jump in the Bitcoin dominance. So now the dominance is running hand in hand with the Bitcoin price. The Bitcoin price is going a little bit up, so the dominance is going a little bit up. That is exactly what I wanted to see here when the dominance is bouncing. I expected the dominance potentially will move here to like 54.5%. Then we are going to see some more sideways chop. And when we get the proper move above that resistance here, then we're going to see a small pop, but it will be a lower high compared to all these other highs here on the dominance. And afterwards, then we get our proper move to the downside. So that's what I'm looking out for. And guys, don't forget, if you want to trade anywhere with me together, do it on Bybit. You still get $30,000 if you use the link down below here, or on Margex. If you cannot use Bybit because of KYC issues, use the link down below here. I still have like a $50,000 margin position running. I just don't like to look at it right now. And also here at Fairdesk, I have also still a position running there. The highest bonus in the industry, $120,000. All these links are in the pin comment below and in the description under this video. So now let's talk about what's happening with Ethereum. Ethereum also still under this downward sloping trend line, and we got here that small drop of $100 yesterday, because the SEC is going after certain Ethereum-based protocols. Because I could not go after Ethereum. Now they are going after protocols on Ethereum. But the golden ratio is holding as support here. And as long as that is holding, I imagine that we would bounce back to the upside and get another retest of this downward sloping resistance line. And I think the next one will be actually the proper breakthrough. And then we will target $3,700 and $4,000 to the upside. So here, if you want to take a trade, wait that we break above $3,430. That will be your entry, but only if we get a 4-hourly candle close above there, at least a 1-hourly candle close. That's when I would enter that, not beforehand, with a stop loss slightly under the golden ratio here. And then you, like I said, can target $3,780 and the $4,000 level. LDO is one of the coins that was targeted by the SEC. I'm going to show you the article in a moment. These kind of news events just happen. You know, I could not foresee this yesterday when I said buy Lido when we're coming down to he did $2.20 level. That is something nobody was prepared for. But for that case, we always have stop losses, right, guys? So, and here's something what I did, because when we're getting such an opportunity where you see Lido or any other coin dropping almost 20% in a single day, that creates buying opportunities. So did I buy a little bit too early? Potentially, yes. Will I get liquidated? Highly unlikely. So I opened a position at around $2. So basically here on the top of these two green candles here. And on the 4-hourly chart, I see already momentum shifting here based on the indicators. So I maybe have to wait another day or two to see this turning into a profit. But I think we come really quickly back to this upward sloping resistance line now to around $1.30. And then I will already sit in really, really nice profits here. So I'm roughly $420 right now in minus here in the red. But my liquidation price is $1.36. I can put in a little bit more money if I really have to get it lower to like $1. But I really don't believe that we are going back to $1 or that we even break that low here of $1.71. So I just don't see that. So we are fighting here right now with that horizontal support and resistance level. But once we are breaking above that, that is actually around the $2. Once we are breaking above that, we will most likely continue to go back to the upside. And we created a big inefficiency candle here. Look at this imbalance that we have here. So from $2 all the way up to $2.30. Hence, you see why I'm quite bullish on Lido right now with such a big inefficiency on the chart that needs to get filled rather sooner than later. Now, here's the article, and here you see what I just said. You know, so LDO value drops below $2.10 amid SEC's classification of Lido and Rocket Pool as securities because they are offering staking services. So because of this staking part, the SEC is going after them. Yeah, and that's why we got the drop yesterday. And while we are already talking about staking, let's talk about today's sponsor on this show here. The sponsor is Infinity Hedge Fund. They have their own token trading right now at $19.44. And let me quick explain you what they're actually doing. They are a deflationary currency where you can stake your tokens to receive airdrops, and the stake tokens will get burned. So the initial IHF token that you have, you will be actually losing that token in exchange for an airdrop if you want to participate. These airdrops are highly sought after on the platform, and I'm going to show you a little bit more how the mechanism actually works here. So this is the pitch deck that they have. So as you can see here, they have a deflationary airdrop burning mechanism. They have a smart DPays gamification mechanism, and also the Uniswap fees that they are collecting also getting burned to make the token even more deflationary. So here now how the airdrop mechanism works for IHF. So instead of receiving airdrops, projects seeded, incubated by the Infinity Hedge Fund, the stakers will have to burn the token to receive the airdrop tokens, and they're getting it at a rate of 1.1 to 2x of their initial Infinity Hedge Fund tokens, but it's also depending on the airdrop. Now, these airdrops are on a first come, first serves basis, and they have a limited supply, so you have to be really quick with burning your tokens if you want to be able to receive these airdrops. And also you can only stake 10% of your Infinity Hedge Fund tokens so that everybody has more or less a fair chance to get a chunk of the airdrop that is potentially given if you participate in them. The debase mechanism, how does that work? So the debase mechanism is really easy. You can target any holder on the Infinity Hedge Fund token wallet, And if it's an old wallet, the wallet can be debased by 0.05%, and these 0.05% will then be burned. Again, that makes the token more deflationary. Of course, you can now scream and say, oh, I lose 0.05% potentially every 30 minutes. And that makes like how much a day? So multiplied by 12, 0.6% of the wallet that you're holding. So after a month, you would feel it. It would be then 18% that you would be losing. 18%. So, but that is highly unlikely to be happening. So that's a lot of holders targeting the same wallet all the time to debase you. Just doesn't make sense. But this is how it works. And new wallets that are coming in, there it's only 0.01%. So they're giving them a little bit of space to grow on their in their ecosystem before they're actually increasing that limit. So and making it increasing the limit where you burn a little bit more. And then again on Uniswap, the fee burning mechanism, the liquidity pool that is added on Uniswap, that will be completely burned, and all the fees that are generated from trading volume, they are also going to be burned. And again, that makes it super inflationary, which should lead to increase in price over time. So, and I also want to highlight the amazing community behind that. Of course, the community is most of the time targeting whales. Just join the Telegram, see for yourself, and they have amazing partnerships coming up. There are some rumors that there is a partnership with Brad because the project is on Base. So that is also amazing. Super low fees in terms of transaction and lightning speed for transaction execution. So yeah, just go to the link down below, check out the project. Might be quite good. I will be honest, I did not look too deep into it, but from the first glance, it might be something worth putting in 0.5% of your portfolio. So I'm gonna leave some links in the description below. Now let's continue with the show, guys, because I also need to run. Theta is still a coin that I'm holding. I gave in my AMCrypto Club waitlist a Theta trade that got officially already stopped out. I'm still holding this trade because I saw something here today, and it is that we are always creating here big bounces when we're coming here into these order block areas. So also here we have seen something like this, and now we have here a bigger consolidation phase, and I believe that this will have a similar bounce as the two preceding ones here in the past. Hence why I hold my position. So my liquidation price is somewhere at like $1.46, I think. So I'm still kind of fine to hold that. I also gonna add more money if I have to keep that position, because I think at some point this is going to bounce back hard and will come straight back to like $1.55 or potentially straight break out to the upside. So it would be not something that I haven't seen in the past from Theta happening. And then the next one is near also still a position that I'm holding. Here we have created a lower low. Here we are forming right now potentially the next higher low. If that's the case, then we only go here from the past high to the low, but we do the other way around, from the low to the high here. So what you're gonna see is that we bounced off the golden ratio here, more or less to the dollar, perfectly. And now we need to reclaim the 0.5 to move here into higher levels. And then we look at the Fibonacci extensions to get an idea to where we can go here to the upside. And here you see at least to $5.28. There is again the next golden ratio to the upside. Also here you see a lot of confluence with the wicks and the candles and the deviation that we got above here. So there is definitely some resistance, so it makes sense to have this as a take profit target. And the next bigger level would be here, the extension of the 1.618, 1.5 level, the golden ratio at $6.55. And that will be something that I'm targeting to add to my position. So I'm gonna add here a little bit to my position, here a little bit to my position, just to average down my entry, because I have a really bad entry. It's like above $7, and I'm still holding this. So I'm gonna average down my entry to around like $6. I'm gonna try like $6 $7.80 or something like that. Because once we are getting a deviation above $7, I will be in slightly profit, can get out of the position before it comes back down here, and then open a new one with all my available funds that I have on that near trade, and then trade this properly to the upside. Then Phantom, really quick, we still got getting held down here by the moving averages and also this upward sloping resistance line right now. The indicators are not looking good, so here we might be in for a retest of around 53.5 cents, potentially even lower. I think on the lower end we could go all the way down to like 50 cents. So if we come back to 50 cents, I would buy a lot Phantom, because I'm pretty sure that we are not seeing anything way below that level. Otherwise, here above the horizontal level, also good level to accumulate here and open positions once we're going back to like 56 cents. Then AVAX, the last one. Here we are running a little bit out of steam because of this downward sloping resistance line and the horizontal resistance level that is also against us. So here we might also get a small rejection or some sideways chop over the next couple of days before we get a proper break here back above the $30 level. And guys, that's it already for today's episode. I hope you enjoyed it, even if I don't have all the lights behind me. Don't forget, smash up the like button, hit the subscribe button, hit the notification bell, and you'll see you then again tomorrow.